Good morning, everyone. This is Andrew Seeker with Anchored Commercial Real Estate Investment Capital, LLC, and I just wanted to welcome you this morning to today's question and answer meeting. This morning, I just going to go over a few questions that investors have had about real estate investing. You're also free to just join in and chime in as you would like. Let's see here. Let's go ahead and get going. So just a couple of housekeeping questions. Once again, I'm not a licensed CPA or attorney, so I can't always, provide you with accurate information. So it behooves you to see your professional about that to see if you can, getting ahead of myself here, to get some advice from your legal and CPA professionals. Okay, let's go ahead and get started here. So one of the questions that I got was, should I go with a fixed rate loan or an interest only loan? And that is, of course, in today's high rate inflation rate, high inflationary environment. That answer, when I look at loans and when I do comparisons, fixed rate loan is going to be a lower rate than an interest only loan. I just did some property analysis on a couple of properties yesterday and used both a fixed rate loan and an interest only loan and found that the fixed rate loan is a little bit better as far as the monthly payments is concerned. The interest only loans, I used 12.75%, which was the worst case scenario from one of my lender contacts. This would be for investors that have no experience or have really bad credit scores or something like that. It does go down to about 11%, depending once again on the experience of the borrower. The fixed rate loan that I used was 8.8%. And if the cash flow, if the property cash flows, then obviously, and it services the debt, then a fixed rate loan would be the better product. However, you are being kind of stuck in a situation where, a fixed rate is basically long term. So you could say a couple years down the road when interest rates do fall, you could just refinance. But then, you may have to pay you may have a prepayment penalty on that loan. And so, you might want to consider that. But interest only loan is usually short term. It's usually for about a year or 2 years. It's a higher rate, but you're just paying interest only on that loan. You're not paying principal. So that gets you into the property and locks you down. But even with a straight interest rate, it can, this property is going to have to throw off a lot of revenue or not revenue, income, rental income or lease income in order to service that loan and service the debt. So the bottom line here is I would say go for a fixed rate loan and then refinance when rates come back down. If you need to if it's a strong property and you need to get it right away before somebody else gets it, if you can hang loose for a year or two to refinance the property, then go ahead and get the interest only loan. All right, next question. Should I wait until interest rates and property values fall or invest now? Another good question. And again, this is another question that just depends. It depends, right? We are seeing property values in some parts of the country coming down. Interest rates are going to be kind of fluctuating. They're kind of going up and down depending on what's going on in the market. Now that Silver Bank and the Silicon Valley banks have failed, I've been reading mixed news on this. Some people say that, interest rates are going to come down because investors are nervous. Some people are saying, well, the Fed is still hawkish. They're going to raise the rates, and so interest rates will go up. So the bottom line, as far as I'm concerned, is do your due diligence. Do a good, thorough property analysis. It doesn't take a whole lot of time. You can do one in about 10 or 15 minutes. And here's what I would do. When you find a property that you like and you're interested in, find out what the gross annual revenue is and cut it in half. That half, that 50% that you're cutting out, is your operating expenses. Okay. And I use 50%, just cut everything right in half. Then what you want to do is if you have a financial calculator, plug in an interest rate, plug in the worst or the highest interest rate that we have going on right now. So from what I've been hearing, it's about 8.8%. Okay, now I know it might be lower. Some banks might be offering 7.75 or something like that, but I use 8.8. Okay, so that's about the highest I've seen in the past 2 months. And I'm using that rate, because I want to be very conservative with my calculations. So you plug in 8.8% interest on a 30-year rate loan and find out what your monthly and annual payments are going to be on your financial calculator. And then you subtract that from your net operating income to determine what your actual net operating income will be. And if it's a positive number, well, then go for it. And if it's a negative number, well, then you got to walk away from that one. Okay. If you have any questions about that, feel free to reach out to me. I'll provide my contact information here in just a few minutes as soon as we get done with this webinar. Okay, next question. What do you think the failure of SVB, that's Silicon Valley Bank, and Silvergate, and what will impact and what impact will it have on real estate? Okay, so the government obviously shut down the banks, SVB and Silvergate, and so they're basically out of business. I also read, though, that the Fed did bail out a few other smaller banks and gave them some liquidity to keep them afloat so that they can put their investors and their depositors at ease, give them some comfort. How this is going to affect the real estate market, I'm not really sure. Now, one thing that this could do is it might drive a lot of people, a lot of sellers, to do seller financing. Okay, so keep that in mind. So if the banks aren't going to loan money, or if they can't, there's the possibility that you could go to a private lender, and I've got plenty of private lenders that are actively loaning money out right now. So their rates are a little higher, but once again, you have a lot more flexibility. They're not quite as strict on their lending requirements. They don't, not all of them ask for tax returns and, credit report. Well, they might ask for credit reports. Okay, granted that. So, but they're a lot more stringent, or a lot less stringent on their lending parameters than banks are. So your best bet would be to try to find a private lender to help you with that. So I guess my conclusion, my answer on this is that, once again, I don't know. I don't have a crystal ball, so I can't tell you what's going to happen. But like all positive mental attitude people out there, and all optimists, it doesn't really matter what happens. If you find a good property, then the money, the financing will follow it. Okay, so that's been said time and again, and it is true. Okay, I just wanted to share something with you really quick. I just got this in an email this morning from a guy named Orrin Claff. I don't know if you know him or not, but I'm also one of his students, and he sent an email this morning with a piece of advice he can give us for raising capital in 2023. So he said you need to grab a map of the United States and draw a giant red X over San Francisco, Silicon Valley, out of Boston, New York City, and Washington. So I thought that was a pretty slick, pretty good idea. So then what's left, as you can see here on the screen, $3.7 trillion of dry powder that's in the private investors, private money, waiting to be deployed into deals just like yours. So once again, if you need any help raising capital, please contact me because I've got connections to these sources of people that are lending money out. And you come to me and I can help you get some of that money for your deals and your projects. Okay, that's about it for the questions that I received. So this will be a little bit of a shorter webinar, which is fine. My contact information is up on the screen, as you can see. Feel free to reach out to me. I prefer email. However, I will take phone calls. If you call me, then please leave a voicemail. It's really critical that you leave me either a voicemail or a text. Let me know who you are, because unfortunately, a lot of people are scamming and just, trying to get my attention and all that without identifying themselves. So I have to be very honest. If you don't leave a message or a voicemail or text me, I will block your number. I will delete it and block it, because I just have to protect myself from all these shenanigans and hooligans and scammers. Another thing I'd like to just quickly point out is my YouTube channel. You can see the link right there on the bottom of the screen. I'd like to invite you to check it out. I do have about a dozen very, very short videos. They're all under 5 minutes long on various topics that are related to real estate, like, should you do an inspection or not an inspection? I talk about working with, loan professionals, mortgage professionals, and just, I have there's a video on there about how to do a quick analysis on a property, the 10-minute analysis, which I admit came from, this came from Michael Blanc, from the Michael Blanc, and just very briefly on that. But it's a very quick little tool or a method to do property analysis. Okay, so that's about it that I have for now. Next week, I'm going to be bringing on Ivory Becker of Insight Strategies, and we will be discussing credit, how to repair your credit, how credit affects real estate investors, and all these things. And so yeah, that's pretty much it. So join us again next week. That'll be Wednesday. Let's see here. I didn't put that on there. Wednesday, the 22nd at 10 a.m. Pacific. That would be 12 Central and 1 p.m. Eastern time. Thank you again. I wish you guys all the best. Have an awesome week, and keep your heads up and keep positive, because even with the banks going under and having problems, there's still money out there. There's a lot of people out there, just common people like you and me, that have money sitting on the sidelines in their IRAs or whatever, and they don't know where to put it. So it's just a matter of finding them, and I can help you find them. All right, enough of my rant. You all have a wonderful and great day, and I'll talk to you soon. Thank you again for watching.